So I have a question that I got today from a customer, and I wanted to explain it because I get this question with just about every phone call that comes in. The question has to do with points, mortgage points, discount points, and and this person was referred to me by a past client, and they were asking me how that works, and they wanted specifics. How much will points cost me? How much will it save me? Is it worth it for me to pay that extra money up front? And the answer to that, it really varies from person to person. Is it worth it to pay extra money to get a lower rate, or is it not? It really depends on your specific scenario. And here are the factors that go into making the decision. Number one, how much does a point cost? 1 point is 1% of the loan amount. So whatever your loan amount is, it's 1% of that. And when a mortgage lender charges points, it's very seldom exactly 1 point or 1/2 a point. It's always some random number. And then that random number that you pay the bank lowers your mortgage rate by a certain amount. And how much does it lower the interest rate by? That depends too. It all depends on the day that you're locking. Sometimes to get your rate down by 1/8 of a point is a small cost and it's a no-brainer to do. Other times, buying your rate down that 1/8, which is the smallest step you can make in today's mortgage rates, is 1/8. Sometimes paying the extra money to get down that extra eighth isn't worth it at all. And it really depends. When you hear that mortgage rates have changed, they've gone up or they've gone down, that's kind of a misnomer because mortgage rates generally stay the same. And what changes is the cost to get each specific rate. So that's what changes every day, is the cost associated with having a particular rate. So is paying points a good question, a good investment for you? And the answer is yes, if you're going to be in the mortgage long enough. The answer is no if you're planning on jumping out of the mortgage in a short amount of time, maybe to refinance, or maybe you're going to sell, maybe you're going to move, or maybe you just don't know if you're going to be in the mortgage for a long time. And if you don't know, then you don't know also if paying discount points to get a lower rate is worth it for you. So you might have to spend an extra $5,000 at the closing of your loan to save $100 a month or $200 a month. And if you're not going to save $200 a month enough times to earn that $5,000 back plus some additional money, it wasn't worth it for you. So it is a confusing question. And if you have more questions or want to know with your specific scenario if it's worth it for you to buy the rate down and spend extra money, then let me know. I would love to run through your scenario with you and get your questions answered. Anyway, hope this clears things up. Thanks a lot.